They sold it as a guaranteed ticket to financial freedom, a digital asset championed simultaneously by its creators and a parade of A-list celebrities, promising everyone who bought in a safe ride straight to the moon. Instead of reaching orbit, that armored vehicle cracked wide open. In a flash, $200 million drained out of the pockets of retail investors and vanished. This chart shows the cascading red candles of the 2021 crypto market. At the time, the landscape was extraordinarily volatile, chaotic, and terrifying for newcomers. People were desperate for a secure harbor to park their money. SafeMoon entered this environment with branding engineered to exploit that public craving for security. Even the name suggested the risk had been removed. We have to look at how a financial instrument, built and marketed entirely around the concept of absolute safety, executed one of the most devastating heists in digital history. The heist operated on two distinct fronts. The first front didn't involve code at all. Instead, it relied entirely on the mechanics of the modern influencer economy. Individual investors tend to be skeptical, but group psychology changes the math. By manufacturing a massive, unified herd, the developers could silence individual doubts and replace critical thinking with collective enthusiasm. To build that herd, they opened their checkbooks. YouTubers and celebrities were paid to hype the token directly to their established, loyal fan bases through the lens of a webcam. They routinely bypassed standard financial disclosures. They read the provided scripts, hit their strict publishing deadlines, and intentionally hid the catastrophic risks from the very fans who trusted them. The developers bought parasocial trust and used it as a tool to bypass the due diligence that investors would normally perform. While the influencers provided the social proof, the technical foundation of the token had to look equally bulletproof to survive any real scrutiny. This is where they introduced the concept of the liquidity pool. A liquidity pool is a smart contract that holds a reserve of funds to ensure investors can always buy or sell their tokens. This diagram illustrates the public version of that pool, a secure vault maintaining a stable balance between SafeMoon tokens and cash reserves. The developers guaranteed these funds were permanently locked away, insisting even the creators couldn't touch the cash. This illusion of impenetrable code was a requirement for the scam. Without a locked vault to point to, the influencers would have had no product to sell to the herd. Underneath the marketing and the secure branding, the foundation was compromised from the day it was written. The smart contract contained a secret backdoor. A programmed bypass allowed developers to sidestep publicized security measures. Through this hidden pipe, they quietly siphoned millions of dollars from the locked liquidity pool directly into private wallets. That stolen retail money was quickly converted into luxury assets. The millions drained from the pool funded mansions and multi-million-dollar sports cars for the creators. SafeMoon succeeded by perfectly synchronizing this technical track-dorave with a massive paid social megaphone. When the drain was complete, over $200 million had vanished from the ledgers of ordinary retail investors. Retail fans lost their savings, while the influencers who facilitated the trap remained largely unscathed, moving on to their next brand deals without legal consequence. The SafeMoon scandal serves as a permanent indictment of the unregulated influencer economy. It proves that social credibility is now a tradable commodity used to bypass consumer protections. Modern financial fraud no longer relies on obvious phishing tactics. It arrives as friendly advice from the online creators that people already follow and respect. As long as digital influence can be bought and sold without accountability, the human element of trust will remain a primary point of failure. Even the most secure code is useless if a trusted voice can lead an audience directly into a trap.